the VC session, which is, I just have to wait for a few of the VCs to come in here. So we do have, for this panel, we have Dixon from Impact VC, Ming from CSC Upshot. We have Hsieh from Fosun RZ Capital, Kyle Liu from DCM, Wang from Northern Light VC, Olivia Wang from ZhenFund, and Chuck Comey from Morrison and Foerster, David Lamb from Atlantic Bridge. We try to squeeze everyone onto this panel. So why don't you come on up now and take a seat, and we'll get started. Thanks. Thank you. Well, we've warmed up the panel. We did have a very good prep session for this, and we have about 10 points that we want to cover in this panel. So stay with us. And Dixon, why don't you come on up? And do we have enough chairs? Yeah. Okay. I'm going to stand over here on the edge. So what do you think about this panel? All right. So why don't we start off with each one telling just a little bit about yourself. We'll start with Kyle. Yeah, take a mic.
Hey everybody, Kyle, partner at DCM. DCM is a global venture capital firm with offices in Silicon Valley, Beijing, and Shanghai, actually co-founded by Dixon. Hey, Dixon. I am one of the US-based partners focused on the US side, but work very closely with our team in China and Japan.
Hi, my name is Hsieh. I'm with Fosun RZ Capital. So we're the venture arm of Fosun Group. So for those who don't know Fosun as well, so it's a conglomerate in China, which has a lot of business under its wing, ranging from pharma, real estate, travel, leisure, media, fashion, and a few more. So for us, we have a venture arm which is sector agnostic, and we have teams in China, India, Singapore, and Silicon Valley. And myself, I'm based in Menlo Park. So generally, we make early to growth stage investment in many sectors, many of which we try to find synergies with Fosun itself, as well as the company that Fosun invested. Thanks.
Okay, thank you.
Hi, my name is Ming, and I started and I founded CSC Upshot back in late 2015. We are a $150 million venture fund focusing on investing the first check at the very early stage of the company, and then try to triple down, double down as the company progresses and have traction. We now have one exited unicorn. We have 4 more in the portfolio and many more in the making. And I guess the connection to China really is that my LPs are mostly Chinese LPs. So I have the CSC group from China and Baidu as my 2 significant LPs. So when it makes sense for our portfolio companies, we do try to connect and make that relationship work.
Hi everyone, my name is Olivia. I run the US investment arm of ZhenFund. ZhenFund is the largest seed stage focused fund in China, originally founded in partnership with Sequoia China. ZhenFund manages $1 billion USD assets under management across 5 funds. We're invested in 600 portfolio companies. We've led seed rounds in a number of the US IPOs on the China side for the last, decade. And in the US, we have about 50 investments, a lot of which are frontier technology focused.
Good evening. My name is David Lamb. I'm a general partner at Atlantic Bridge. We are a 15-year-old cross-border investment fund. We're currently investing 3 funds, totaling just over $500 million in commitments. Our strategies include a cross-border US-Europe strategy, a cross-border Europe-China strategy, and a seed strategy around university spinouts in Europe. We have been investing typically in the Series B and later rounds, sectors, mostly in the B2B sector, ranging from semiconductors. We're one of the few firms that's doing that still in the industry, as well as artificial intelligence and enterprise software.
Hi, I'm Dixon Dahl. It was mentioned briefly that I founded DCM a number of years ago, and we were, I think, widely acclaimed at that time, being the first firm from Silicon Valley that successfully went in and built a practice, and certainly in China, and also did it at the same time in Japan. Right now, I went emeritus from DCM several years ago, like 2 or 3, I can't even remember exactly what it is, but I'm continuing my very deep involvement in venture investments. I'm doing quite a few of them for my own account. I've actually started a new firm called Impact Venture Capital, and I'm experimenting with a number of different ways to really help more people around the world understand the important role, the critical role that venture capital creates in job creation and forming an innovation infrastructure in any territory that in the world really decides to get serious about it. And so Impact VC is a small fund. It'll be sub 100 million for the first fund, but I'm still having a lot of fun, and I really find that this is a very stimulating thing to do, and it makes me at least feel young, even though I'm getting chronologically a year older every year.
Hi, I'm Chuck Comey from Morrison Foerster. The FBI director is a second cousin whom I've never met. I'm based here in Palo Alto, but took a long detour in Asia, spent 16 years on the ground in Tokyo, where our firm started to represent SoftBank, and then opened our Shanghai office in 2003. I first worked in China in 1984, read and speak Mandarin, and do a cross-border venture and M&A practice out of Silicon Valley.
Okay, that's terrific. So why don't we start on our topics of discussion here. Number one is, what is the impact of the U.S. trade tensions, U.S.-China trade tensions on your fundraising?
So, as Dixon mentioned, we are now on our 9th main fund. We've been around since 1996. We are actually in the process of raising, keep it kind of in this room, our largest fund ever. We've closed on most of it. I think that we would have been substantially oversubscribed should the trade war had not escalated to where it was. That certainly are, and the majority of our LPs are not China-based, so most of our LPs are US and European, and kind of sprinkled around the world. And there certainly have concern around cross-border funds, particularly ones that have a big presence in China, how the trade wars are going to potentially impact it. And so definitely, certainly a lot more questions from LPs than in prior years, where it was just, I think we've kind of taken for granted that the prior sort of decade plus, there's actually been lots of strong collaboration between the US and China, and really just in the last couple years, things have really started to escalate.
Sorry, before we go much further in this panel, I do want to say that we had Yang join us from Northern Light Venture Capital. So do you want to come up? It's kind of crowded up here, and we do need a seat for you, but did you want to come up and join, or do you want to?
I can talk to you, I just give a brief introduction of Northern Light.
Okay.
And then, after the meeting, after the panel, anyway, if you're interested, you can come to me and we can chat. So I joined Northern Light in 2006, and then Northern Light is a cross-border founded by ZhenFund. He was the founder of Netscreen. Northern Light is one of the first VCs in China, starting in China in 2004. And in 2014, I left Northern Light and joined Fosun. I was colleague with Lee. Colleague with Lee for a very brief few months, and after 4 years. So during the 4 years, I was leading Fosun's venture investment in Silicon Valley, focusing on health tech, fintech, insurtech, and also consumer tech. And 3 months ago, I joined Northern Light again and managing their investment in Silicon Valley. Northern Light, the current fund, Fund 5, is $500 million in US and $250 million equivalent in RMB in China. And about 15 to 20% of the US dollars are investing in the US. And we focus on life science and also hardware, security, enterprise software. Thank you.
Okay, thank you. Thank you. If you want to chime in on any of the questions, just give me the signal, okay? All right, good, thank you. All right, let's go back to our fundraising question, and we'll put Lee on the hot seat.
Actually, in terms of fundraising, that doesn't quite apply to it because for Fosun, actually, our fund Fosun the sole LP. So I think we actually don't quite have to deal with that.
Well, that's
yet.
true, yeah.
But later on, when we talk about
But they care about the returns, though, don't they?
Yes. So later on, maybe when we talk more about how the situation deal with investing in startup, maybe I can chime in more at the time.
Oh, okay, sure, of course. Anyone else on the fundraising question?
Sure, I'll jump in a little bit. Since I'm probably the youngest fund here, our fund only started about 3 years now, so we are definitely planning for our next fund, next vehicle. And given that our Fund 1 is composed mostly of Chinese LPs, the question is always asked, how are your Chinese LPs impacting your investment strategy? And how do you structure your fund to such that you have a more diversified LP base? But I think that the US-China trade war certainly has caused a lot of more questions and tensions and uncertainties. But I feel that ultimately, though, I mean, just look at Northern Light being here and looking at, I think we're all still very much interested in the US-China business and partnerships. I think that the LPs understand that that this is one of the differentiations that we have as a fund. And so we are embracing it. And I feel like the LPs that have been supporting us continue to buy that strategy. So yes, it's causing more questions and maybe it's taking more time. But I do believe that staying with the strategy that worked makes sense.
I've got
Dixon.
couple of additional perspectives on this subject. I think the general economic uncertainty associated with the with all the currency controls that have been mandated and the restrictions on exchange, conversion of RMB into dollars and vice versa, is definitely having a negative impact on new venture firms or starting up that want to combine activities and investments in both the U.S. and China. I think it's definitely causing a lot of problems in that. It's the Chinese government has a history of trying to stimulate a vibrant venture ecosystem, and I go all the way back to the days when I was founding DCM. I used to go over there and I was on a bunch of committees to help educate their government about what did they need to do to get a vibrant venture ecosystem functioning and bring people together from all over the world. We'd have these meetings and so on. Then we'd get some time away from the meetings and we'd end up reading about silly things that the Chinese government did, like throwing several $1 billion at regional entities all over China to try and stimulate entrepreneurial activity. And this money was being invested and managed by people that didn't have a clue about the entrepreneurial or the company formation process. And I think that it was by and large, just a gigantic multi-billion-dollar experiment that failed miserably. And I don't think that there's been a whole lot of dramatic or radical change in the Chinese government to try and come back in and fix some of those problems. There's a long list of things that need to get done. I'm not going to go into all of them here. I think that the Chinese have a great opportunity to put together some new internationally certified stock exchanges so that companies that do succeed in China can, in fact, go public in their home countries and so on and so forth. There are a lot of other things that we can talk about a little bit later, but those are, I think, on the top of the list of things that need to get done and that would be really helpful for a more vibrant venture ecosystem in China.
Well, it's great to have your perspective, Dixon.
I'll just add a quick note here in terms of LPs. We closed our China-Europe fund last year that was backed by 2 sovereign wealth funds, one of which was CIC of China. And then we have our first closing of our Europe-US cross-border fund, which is mostly European LPs. I would say that the trade tensions, for a lot of LPs are very concerned about headline risk. And we read it in the headlines every day, what's going on between the US and China. And so I think a lot of the cross-border strategies probably are getting a lot of questions. I would say, though, that from an opportunity standpoint, to Dixon's comment about some of the local funds have probably driven up pricing a lot in China. Now some of that capital is less reliable. That the US dollar or euro denominated funds that are investing solely in China, I think are seeing a lot of very positive deal flow. And of course here in the US, there continues to be a vibrant VC community of all types of investors who have capital that are investing here in the US. So I think headline risk really pushes LPs to question some of these issues, even though I think that in the long run, this will be sort of a small bump in the road.
The last footnote I would just add is, of course, the smart funds realize that from the U.S. government's perspective, it's really a typically structured fund where the LPs don't have control rights. And so long as the GP is otherwise U.S., that fund should not encounter problems with the government. So it's definitely a lot of questions are being asked, and I'm spending more time on that than I certainly expected before. And it's really, that's from FIRMA last fall. That sort of predates the latest trade episode as the leaders go back and forth.
Yeah, and Dixon wants to add.
Could I say one more point here? There's a very recent development that many of you may have heard about, but it's called CFIUS, which is a CFIUS, and the whole purpose of CFIUS is to make sure that important key technologies, whatever that means, that are developed here in the U.S. Do not fall into foreign hands, and so they're requiring any companies that have or want to accept investments by foreign non-U.S. LPs to get CFIUS approval, and there's it's a very new idea, and I think there are a lot of uncertainties that people haven't gone through yet. I don't think there have been any, the Huawei arrest. I mean, those are just some examples of the kinds of things that the government is concerned about these days. And we're going to have to stay pretty close to that, because I've talked to quite a few people in the venture industry that think that the CFIUS or CFIUS is going to slow down, foreign mergers and acquisitions of U.S. companies and so on. And so we're going to just have to stay close to it. This is being watched very closely by the National Venture Capital Association, which I used to be actively involved in when I was chairing it. And we had a lot of different issues then, but there always are these new kinds of issues that are coming up, and they affect the kind of the free flow of M&A activity and IPOs. They're going to definitely adversely affect, IPOs. They'll have to get the standards to which companies are going to have to comply are going to be a lot tighter and tougher than they would have been historically.
Chuck, from your perspective, I mean, you're seeing a lot of these deals. I mean, and there has been a slowdown already from the China to U.S. tech investments, pretty dramatically on the dollar side, on the volume side, but not so much on the deal number side yet. But what are you seeing happening now with these reviews, with these regulatory reviews, and are most deals getting through, or they're not getting through?
Right. So just a few quick clarifications. One, CFIUS is unrelated to IPOs. It does not have jurisdiction over an IPO process. That's the SEC, and nothing's changed with the SEC. So I think it will continue to be the case that so long as their accounting standards are up to snuff and internal controls, there will be Chinese issuers maybe that opportunistically seek listings in the US. On CFIUS, what it boils down to for venture, so first of all, like China to US tech M&A, it ain't happening for the most part, so far as I can see. There are some deals on the fringes, and certainly, healthcare and life sciences is less centrally on the CFIUS radar, although there's a very broadly worded biotechnology category in the pilot program now, but that's about altering living or non-living material. So really for venture, what it boils down to is the foreign investor going to be getting one of three things? A board seat, a board observer right, or access to material non-public technical information. And that's like a broad defined term. You can still do diligence, and so I think for the funds that want board seats, it's going to okay, we're going to become known, and we're going to file. And I have clients that are doing that, and it's like they're not deterred by CFIUS. And what sometimes below the headlines gets lost is that most deals do get approved. There are very few transactions that actually get blocked, so it's about mitigation and the access to the core technology of the company. And it's not the whole thing with the pilot program is bizarre too, because the premise is that yes, founders would be disclosing trade secrets in a board meeting, and who does that? So you can see the paranoia and the logic-free zone that CFIUS represents.
Right, but I think we are starting to see smaller deals now, and deals that are more strategic. I mean, in the past, you saw Baidu, Alibaba, and Tencent investing in Uber and Lyft and Magic Leap. Are those kind of deals now out of the question?
For Tencent, absolutely. There are certain Chinese companies which are viewed as threat actors by the US government. And so there are certain kinds of transactions, locational, data-driven, the ability to access and store data of US citizens that aren't going to happen, but there are a lot of deals that still will happen. And it does actually, the details on the structuring really do matter, so you have to hire a smart lawyer.
So if Tencent is on the watch list, what about Baidu, which has made a lot of artificial intelligence sensor kind of technology deals in the US?
Yeah, I don't know about Baidu, but there are cases. And the other thing about CFIUS you got to understand, it's an information gathering exercise by the US government, right? They are going to understand who are these investors. And of course, that's exactly what every fund from China does not want to disclose, right? No one wants to disclose their LPs and where the ultimate beneficiaries are, owners are. Well, if you file, you're going to have to. And so it's just like, this is the new rules of the game, like it or not, you got to play. So, and I don't think people are going to walk away from the US market because of that, at least the smart ones.
They won't walk away. They'll just figure out how to structure the deals so they get approval. Okay.
I think it would be fair to say that that one of the main beneficiaries of this trend will be the legal profession. And,
quoting Shakespeare.
Absolutely, yeah. So
Is that Henry IV?
I just wrote about this trend in my Forbes column on Monday and quoted Chuck in there. So you might want to check that out. But it does have some very new research on how the deal volume has dropped considerably. And that was customized research that I got from S&P. So check it out. Another really interesting trend, I mean, Dixon, you touched on this a little bit, and I've heard this discussed somewhat, that maybe there'll be new higher bars for Chinese companies going public in the U.S. What do you think?
I think the answer is probably yes. I mean, there are, I'm just involved in one transaction right now that there's a company in Canada, it's BlackBerry, that's trying to acquire a cybersecurity firm called Cylance, and my son's firm happens to be an investor in it. But so it's not just a binary change of whether things can get done, but some of the transactions that ultimately may still happen are going to take a lot longer and be more expensive to get implemented.
So are we starting to see then a separation of, David, did you want to comment on that question?
No, I just...
Do you? Oh, okay. Anyone have any pending IPOs that might be impacted? No.
You're
No?
willing to comment
That
publicly
you're willing
on?
to comment on here? We do have some media in the room. What? No? Okay. Another thing I've heard a little talk about is whether these giant companies from China might actually be nationalized or broken up. Does anyone have any comment on that?
Or have they already been?
Have they already been nationalized?
And
But
they
not-
mostly stay on.
Well, yeah.
So, I don't.
Anyone in the audience think about this at all? Okay. Well, I just think it's an issue that might be on, you should think about, that it might happen. But let's move it back a little bit more to venture. Let's talk about what kinds of exciting technologies that you're seeing today out of China entrepreneurs, because really we've seen, the copy to China phenomena, that's dead, right? And now we're seeing the copy from China. So, I mean, what is being copied from China that you think is just super exciting?
I wouldn't say that's something that's copied by China, but I think just general in the artificial intelligence space, for instance, image recognition, that's an area that's very exciting in China because just the vast amount of data they were able to collect. So I think companies like SenseTime or CrowdFace, those are very interesting because just given the sheer amount of data they're able to collect, they're just able to do a lot of very interesting things and analytics going forward. And that may be something that company outside of China were not able to do. Right. So I think going forward, company in that space, or for instance, company in the autonomous driving space in China, right, I think will equally be very, very exciting.
Autonomous driving, right.
In China, ZhenFund, I think we're really excited about platforms built on WeChat and on chat. You have companies that are doing GMVs of hundreds of millions of dollars without a website, without an app. They really just have a WeChat account. And then with Pinduoduo, there's more hyper-vertical group buyings, PDDs specifically for certain types of low-budget groceries and, toothpaste and et cetera. So there's like a lot of research being done there. But just like these new ideas of tools built on WeChat, especially because SaaS is so behind. Everybody thinks, at some point SaaS is going to take off in China. When will that be? It feels still very slow, and we really think it's going to be integrated with the WeChat ecosystem. And we've been testing out a lot of those things, and it's been really interesting seeing, YC come into China and think through that as well. I know they have their own WeChat account now, and they're in the process of announcing some of those companies that are really interesting interesting. And then going back, talking about US-China, I think, you know, still being in January, the venture community really hits the ground running with JP Morgan Healthcare Conference, Consumer Electronics Show. And being in both those things, you know, we often host, you know, large parties and events with our fellow cross-border colleagues. You see the kind of drop off in attendance. Like usually you go to a party and there's like 400 people jam-packed, you know, hardware, AI engineers from China. I think now I feel it's like a 20% drop off, you know, and then for JP Morgan, I think the pulse on cross-border activity in healthcare is really Wu Xi's party, which is amazing, and it's always super packed. It still is super packed, but you can feel like the slight softening as well, so.
So we've invested mostly in later stage companies and also in the B2B space. So a lot of the areas that we're finding very interesting in China is around some of the industries that China is pushing to provide and build their own sort of sustaining supply of, semiconductors being one. And so we did complete a transaction last year in a semiconductor company that is competitive with others globally, but is really focused on the China market. And it's a technology and a sector that China is very interested in developing a domestic supply of. The other area is 5G. So one of our other companies, actually out of Europe, is going into 5G trials with China Mobile this month. So that's very exciting that 5G is probably going to happen in China before it happens in other places. And I think most of us in the industry view 5G as a huge game changer in terms of just, you know, what IoT can do and the data rates and the like. So I think you're going to see that leading edge, and that will then, I think, create other innovations in China that are just going to happen before they happen here.
So this semiconductor company that you invested in, that's based in China?
Yes, yes.
Okay. And what do they specialize in?
They make one of the major components for cell phones.
Okay. Because this is one of the real sensitive areas, semiconductors, right? And it's also where the U.S. still has a lead.
Yes, and I think in semiconductors you're seeing in China a lot of companies that are copying or have in the past copied U.S. technologies that have over time, not unlike their systems peers like Huawei and ZTE, eventually built up domestic capabilities, eventually became meeting global standards. And I think that you're going to see more and more of that where I think that the U.S. does see China as very vulnerable in the semi space. And not surprisingly, China is very focused on making sure that they have domestic supply because, you know, what happened to ZTE could happen to other companies as well.
Sure. Absolutely. So in all of this kind of these trade tensions and tech tensions and China getting ahead as a leader, what do you think, what do you see China and Silicon Valley working more closely together or working separately more often? What do you think the trend is? Are we still going to see, this whole Silicon Valley has been driven a lot. There's been a lot of cross-border activity. So do you think that that's still going to continue to be a driver? Is it going to be more separated in the future, or is it going to come together more? What do you think? Oh, come on.
I think politics is very complicated, and I definitely don't want to comment too much on that. I think things will most likely get worse before they get better. And I think I can only just speak for like what I personally hope for or think of. You know, when the policies have been hitting, you can see like kind of AI separating, kind of reacting and separating immediately, and I think that's been really interesting. But I think what you see is also like the biotech community, because we are in a lot of computational biology, synthetic biology companies. It's very interesting to me because I think they've resisted it. You know, to them, it's like, on the one hand, if you have two separate internets, it's a horrible world. You may not see people dying immediately, but if you separate access to drugs, if you separate access to patient recruiting for, innovation to help people get better, that has like more direct consequences. So I think, we've been very closely following all of the policies, engaging very deeply in thinking, because I think the implications for public health and for biotech have more immediate implications. And I've personally kind of seen the biotech community resist it, and seeing US drugs still get approved in China, American companies still working with the Chinese community. And it'll be interesting to see if that will continue. And obviously, I hope that would continue.
And certainly a lot of the flows of the electric car makers from China that have set up in Silicon Valley, and some of the money that has come in from China into Hollywood and digital content. And some of the companies, the tech companies that have started in China and now have an impact here, like TikTok is a good example. But I just wonder myself whether we are going to see more of a bipolar kind of situation happening with U.S.-China venture. And Kyle, what do you think? I see you kind of with a look on your face over there.
I think it depends on the sector. I think the highly sensitive sectors, from a policy perspective, I think it's going to be hard to see a path in the short term where there's increased collaboration. But I sort of look at it more from, if you take a step back and look at the number of overseas Chinese students that are in the U.S., whether for undergraduate or graduate, the U.S. is still very much the preferred place to get educated, especially at the graduate level. And a lot of those graduates previously had then come to Silicon Valley, worked in Silicon Valley. I think over the last 10 years, we've seen a transition where the opportunities are bigger in China, and a lot of them are going straight back to China. But what hasn't changed is that attraction of Chinese students to U.S. colleges, and with that comes natural collaboration in the networks that they build. So I think longer term, you'll continue to see collaboration. I think in areas where they're not as much sort of national scrutiny, we were investors in Musical.ly, which became part of TikTok, and in areas of social and consumer, I think you'll continue to see a lot of innovation. I just got back from China last week, and I was very excited about a lot of the next generation retail trends that were happening, and I can see a lot of companies in the U.S. Look at some China best practices and start to implement some of those strategies. And so I think in those areas, you'll see collaboration.
I'd just add that what we're seeing, because we do have an active presence in Europe, most of my colleagues are actually there, is that in some of these sensitive areas, a lot of that capital is starting to get directed to Europe in terms of overseas investment and potentially M&A as well. So we have multiple companies that I would consider in some of these sensitive sectors that are being actively approached by Chinese partners, either for investment or M&A. And their first question is, do you have any operations in the U.S.? And for those particular companies, the answer is no. So that makes it much easier to do business there.
Right. So one of the things that has been in the news about China innovation is this genetic engineering, and this Chinese scientists who came up with the twins. And the first babies born that were genetically engineered, the twins. So do you think this is just going to be a China story?
I think the way he did it didn't really follow like international protocol, and so even China has kind of criticized him for that.
Yeah.
So I think it's just really about best practices, and can we really bring best practices to this?
Right. What about the exploration of the dark side of the moon? What about the giant vending machines that are selling cars? There's a lot of really interesting stuff going on.
There was like an acquisition of a U.S. ed tech company by a Chinese company end of last year in the coding space, and I think it's really interesting how you're seeing like U.S. coding content come into China on a very low scale, not the whole Alibaba Tencent scale. And then you see like Lambda School and other companies that will make announcements in the coding area in the US too. So that's been kind of interesting.
So since Baidu, Alibaba, and Tencent are so strong in China, do you think that this has impacted the startup community there, that, maybe that all the great ideas are just by them and some other, companies like that have already gone public from China rather than the startup? I mean, does Silicon Valley, has, always bubbling up with startups, right? Are the bots sucking out all the air out of startups or not?
I think if you were to ask me a year ago, 2 years ago, I would say yes, they're incredibly dominant. I think they've been hit very hard in the last year. Just look at their stock prices. I mean, and I think with that comes opportunity for startups, because there is some vulnerability, whereas previously there wasn't as much. And I think that that actually, as a VC, I'm incredibly excited about that.
Yeah, so actually, Baidu is one of our LPs, so I get to have a bit of different look and perspective on their activities. And it's like saying that are the bad companies sucking the air out of the entrepreneurs in China. It's the same thing as saying is Google, Facebook sucking up the air here in Silicon Valley. I don't think so. I think that there's still a lot of companies coming up, and I know that day to day, these quote unquote bad companies are concerned about what's coming up, what's new, and what's bubbling up, and there's definitely still a lot of innovation coming up from both sides. I actually feel like they are more the Facebook and Googles of here. I mean, who cares?
Right, okay. Well, I think the only thing standing between the wrap of this panel and us wrapping up is is just any other further comments. I know everybody wants to get to the reception next, which will be out here in the foyer, but any just final comments at all?
Or a question from the audience?
Or a really good question from the audience. Okay, all the way in the back. Can you just say who you are? You can actually come up here. Why don't you come up? We'll really put you on the spot. Okay. Now your question really better be good.
So my name is Ping. I'm an entrepreneur. My question is, whether we're talking about trade war or CFIUS, it seemed to me they're just symptoms of ultimate question, which is technology a zero-sum game? Is this a winner-takes-all market? If it is, then the trade war is not going to go away, right? It may happen in different forms, but what's your take on that?
Okay. That's a good question. I think we touched on it a little bit, but if anyone wants to add.
I mean, I don't think it's a zero-sum game. I think there's a lot of, it's a win-win, actually. So I think technology, by definition, is global, and it's without borders. So, and I think that's why we're all here. We are all investing in this, what we believe is cross-border, even though there's really not a border for these technology innovations.
Thank God we don't have a wall.
Yeah, we don't have a wall.
Well, and I think a lot of the global supply chains are international, and the movement, as Ming said, is it's unstoppable. It's already happened, so it's hard to turn back the clock there. That being said, I believe that some of the political leaders don't necessarily share that view, and so they are the ones driving a lot of those policies, not the people like us. So I think that obviously, does create barriers, but they're more politically motivated than I think business motivated.
I would just like to amplify that there is a number of sectors out there now that are widely important to companies and consumers in all different countries around the world. And I think that if you look at the opportunities for improved technology to make people's lives more secure and less susceptible to hack attacks and all that kind of thing. Those are kinds of the benefits that are universally applicable without regard for the the politics. And I think that AI is absolutely just really in the second or third inning. of its impact in making the world a better place. And I think you're going to see improvements in that coming from all the corners of the world. I'll be over in Israel in a couple of weeks, and Israel, China, and the U.S. I think are widely regarded as the three greatest places in the world for AI development. Probably some other people that would argue with that, but I'm just there are a lot of AI is pervasive. It's going to cut across all industries and make the world a better place, depending on how people choose to utilize it and implement it.
Yeah, no, I think 5G is another one of those areas. 5G is another one of those areas that's going to impact a broad range of sectors and industries. So I think we do have to leave it there, and I could easily go on for another half hour and ask them a lot of other questions, but we do need to wrap it up now. So I hope you will enjoy the reception, and let's give our venture capital panelists a round of applause. Why don't you come up? Come up. We're going to get a photo now.